Let's delve into understanding what an option is in the financial world using Meta stock as our example. Today, Meta stock is valued at $493 per share as of March 2024. Now let's rewind to November 2023 when Meta was priced at $320 per share. Imagine a trader, let's call him John, who believes that Meta stock will increase in value. At that time, when Meta was trading at $320 per share, John decides to purchase a Meta call option at a strike price of $350. By buying this option, John acquires the right, but not the obligation, to buy Meta stock at $350 per share at any time before the option expires. As time progresses, Meta's stock price rises steadily, reaching $493 per share by March 2024. Since John has the option to buy Meta stock at $350 per share, he can now exercise his option and buy Meta shares at a lower price than the current market value, allowing him to profit from the price difference. This scenario illustrates the basic principle of options trading. Options provide traders with the opportunity to speculate on the future price movements of an underlying asset without needing to own the asset itself. In this case, John benefited from the appreciation of Meta stock by purchasing an option at a lower price and exercising it when the stock price increased. Throughout this course, we will delve deeper into various option strategies and their applications in the financial markets.